Hey everybody, Happy New Year. This is your January 2023 Ottawa real estate market update. So as always, if you've seen these videos before, you know I always start off with my trusty cheat sheet. I'll read you through a few key stats from December 2022, and then I'll give you a little bit of my own interpretation of what it all means and what you can expect if you're a buyer, seller, investor. So here we go, stats for December 2022. Now, if you remember in my last video, I predicted that December would be a very, very slow month for Ottawa real estate, and that's exactly what happened. We sold a total of 601 properties in December. 466 of those were freehold. The other 135 were condos. It's about 30% less than we sold in December of 2021, and it is the fewest properties sold in the month of December in Ottawa since 2014. So pretty staggeringly low number of properties sold, especially when you consider the difference in population between 2014 and now is about 150,000 more people in Ottawa, give or take, than there were in 2014. So very, very slow month. The average sale price for a residential property in December was about $656,000. That's down 7% from December last year. Average price for a condo sold in December was $435K, give or take. That's up about 9% from December of last year. Inventory, so the number of properties on the market, is sitting at about 4 months. That does it for the stats. I don't think I need this anymore. I'll pull this up. There we go. So what does it all mean? Well, to me, you can look at the data I just presented from a pessimistic point of view or an optimistic point of view. There's really reasons for both. The pessimistic point of view, obviously, is that we're selling very few properties compared to years past, right? There's no way of sugarcoating that. 600 sales in December is a very low number. Now, the reasons for optimism, however, are that A, prices have been really stable since about the month of August, September, and B, so have inventory levels. Right, so the average sale price in December was only about 2 or 3% lower than November, October, and that's normal, by the way. In any typical year, the average sale price in Ottawa in December is lower than a couple of months before it. That's just because a lot of quality inventory gets taken off the market before December, and the people who are still on the market at this time of year tend to be a little bit more motivated to sell. So in terms of the months of October and November and the average sale prices in those months, the average sale price for December of last year was right around where you would expect it to be in a flat market. Same goes for inventory levels. I mentioned we're sitting at about 4 months of inventory. If you don't remember, inventory is a measure of supply and demand. It's a measure of the pace of the market. So when I say we have 4 months of inventory, what it means is that it would take about 4 months to sell through all of the current active listings based on the pace of the market in recent months. 4 months of inventory puts us in a balanced market. We've been sitting around 4 months of inventory really since August. When inventory rises, we shift markets, right? So when we have very low inventory, we are in a seller's market. As inventory climbs, we head towards a balanced market, which is where we are now. And then if it continues to climb, we end up in a buyer's market, which is bad news if you're a seller, right? Prices come down in a buyer's market. So these stable inventory levels, the fact that inventory is not continuing to climb, indicates to me that there's a very good chance that we're starting to or have already sort of found this point of balance in the market, right? Again, we're in this balanced market. I wouldn't be surprised personally if we stayed in a balanced market for all of 2023. That can change. I don't have a crystal ball. Yes, I'm a realtor, but I can't tell the future, so don't hit me up in the comments if things change in 3 months. I don't know for sure, but I'm telling you, I think we're probably gonna be in a balanced market for most of 2023. And so as a seller, what that means is if you are planning on selling in 2023, you don't necessarily have to be in a rush to get your property up on the market ASAP, right? To list at it's kind of a crappy time of year to list because we're not seeing prices chunk down every month, right? So you can be a little bit more patient. You can kind of work out the timing for when it's good for you to list. I can tell you personally, if I was selling my home, if I was already on the market now, I would just stay on the market. There's no point in removing it at this point. You made it through the holidays, you might as well keep going. If I was planning on selling though in 2023 and I had some flexibility, I don't think I'd personally list right now. I'd probably wait till March, April. I keep an eye on the market. If things pick up a little earlier, I might list. Again, that's super specific to your situation though, and your property and the competition, and there's a bunch of other factors. So I'm just speaking very generally, but you should definitely talk to your trusted realtor if you are thinking of selling and devise a plan that's best for you. Now, opportunities for buyers in this market. January, along with November, December, they tend to be the months where I find that sellers are most willing to negotiate on price. They're most motivated because quite frankly, it sucks to be on the market at this time of year. The weather's gross, the temperature's gross. keeping your house clean is way more of a challenge than it is when it's nicer out. It's no fun to leave for showings on a day like today. So if you are looking for deals, this can be a good time of year to get them. I find as we start to head into as we start to head into February and then March, a lot of sellers, even those who've been on the market for a while, they get this sort of renewed sense of optimism because they see the market picking up around them again. And so all of a sudden, where they may have been a little bit more motivated in January, they start to kind of dig in a little bit more as, again, the weather comes up. There's this sort of renewed hope that they have, right? So again, if you're a buyer, investor as well, this is not a bad time to go looking for deals, to go throw some really aggressive offers on some properties and you know, just test sellers' motivations. And of course, if you are going to invest in real estate, you should have a thorough and flexible plan in place that accounts not just for sort of the best case scenario, what we hope is going to happen, but also for a few curveballs, right? You want to be able to withstand some tougher times to make sure that you hold on to that investment long enough for it to be a good one. Before I got into real estate, I was a project manager. One of my big roles was risk assessment and risk management. When you're doing a big project, your risk management strategy involves identifying all the risks, identifying their likelihood of occurring, and then identifying the impact should those risks occur, and then putting a plan in place to either avoid those risks or to mitigate them, or to just accept them. I think you should take the same approach when you're looking at real estate investing. Identify the risks and make sure you have a plan in place to take those risks on. And if you feel that an investment is just too risky or that you don't have any way of mitigating against certain risks, then maybe real estate investing is not the right thing for you right now. Maybe it is. I don't know. Talk to someone. Talk to me. Yeah, that's it for this month. Thank you for watching, and we will see you in February 2023.